Yesterday, Tempus AI jumped nearly 14%, this AI healthcare name, backed by both Cathie Wood's ARK and Louis Lopehi's holdings, finally returned to the spotlight. With the share price now approaching its all-time high, let's start with the latest company news to explain why the stock spiked. On September 11th, Tempus AI announced that the updated version of its Tempus Pixel device had received special 510(k) clearance from the U.S. Food and Drug Administration. This is an important regulatory milestone, signaling that the upgraded device is now formally authorized for commercial use in the United States for cardiac imaging. In simple terms, the FDA's clearance opens the door for the enhanced Tempus Pixel to be marketed and used in U.S. anesthetist settings. With the trigger clear, let's unpack why this specific clearance matters and why investors cared. First, the clearance means the updated Tempus Pixel can legally be marketed and sold in the U.S. as one of the world's largest healthcare markets. The U.S. offers vast demand and purchasing power, expanding TEM's addressable opportunity and lifting expectations for future revenue growth. Second, the 510(k) pathway is rigorous. Meeting safety and effectiveness standards validates Tempus Pixel's technical strength and quality in cardiac imaging. That credibility improves competitiveness versus peers, helping win hospital and physician adoption and supporting sales. Third, this also strengthens the moat. Post-clearance, Tempus AI can further entrench itself across medical AI workflows, deepen collaborations with healthcare companies and research institutions, and widen its market share, laying a stronger foundation for long-term development. With the regulatory backdrop established, let's focus on what Tempus AI actually does and where its edge comes from. TEM's core mission is to reshape healthcare with AI, enabling more precise diagnoses, especially in oncology. It integrates a patient's genomic sequences and health records with large-scale medical datasets to deliver tailored, efficient treatment guidance to clinicians. In precision medicine, Tempus is not just another participant. It is a frontrunner driving change. TEM's advantage is breaking the industry's data silos. Healthcare data is fragmented and hard to obtain from private providers. Tempus has built proprietary data pipelines that integrate genomics, clinical outcomes, and other critical signals, creating a defensible, hard-to-replicate data moat. The scale and quality of data reinforce a virtuous cycle. Start from data accumulation to better AI models, and finally higher value, further strengthening its edge. In a fiercely competitive field, Tempus stands out through its ecosystem. The company has deep partnerships with 200-plus biopharma firms, and more than half of U.S. oncologists use its tools in daily practice. That means Tempus is embedded in the heart of cancer diagnosis and treatment workflows. Like a real-time co-pilot that influences clinical decisions from a market perspective, Tempus sits at the crest of a healthcare tech revolution. Projections indicate a 43% CAGR for U.S. AI health tech from 2024 to 2032. As AI scales in personalized diagnostics and precision therapies, the sector is entering an expansion phase. North America accounts for around 45% of the global precision medicine market, giving Tempus substantial room to grow within a space approaching $200 billion. Especially as partnerships expand and technology advances, Tempus's moat isn't just its network. It is the data and IP. The company reports an identified molecular database exceeding 200 PB, serving as a foundation for AI training. Like a massive medical knowledge vault that supports drug discovery, clinical trials, and individualized care in AI, data scale and quality drive advantage. And Tempus's dataset positions it as a benchmark player with a difficult to dislodge lead on innovation. Tempus's patent portfolio is notable: 271 patents granted, 218 active, spanning AI algorithms and genomic analytics. outpacing competitors such as Flatiron Health and Bruker. Strong IP fortifies the moat and sustains leadership. With the strategic positioning clear, let's examine how this translates into revenue, deals, and the P&L. In short, Tempus's growth engine is a three-pillar model. Data, services, and testing. High-margin data and services leads growth. In the first half of 2025, this segment delivered $141 million in revenue, reflecting strong momentum. Examples include a 3-year, $200 million agreement with AstraZeneca, Pathos, and a real-world data collaboration with BioNTech, demonstrating unique value in drug R&D. Tempus completed the Ambry Genetics acquisition in February 2025, adding new energy to its testing business. Ambry contributed meaningful revenue in the first half of 2025, lifting overall performance. The deal diversifies Tempus beyond oncology and creates synergy with the core platform. Notably, Tempus increasingly blurs the line between diagnostics and CRO-like services, tapping into pharma's large R&D budgets for durable revenue streams. Operationally, from 2019 to 2023, oncology NGS test volumes rose more than 5 times and gross margin expanded from 26% in fiscal year 2019 to 54% in fiscal year 2023. The company kept high growth in 2024 and the first half of 2025. In the first half of 2025, total revenue reached $570 million, up 82.94% year-over-year, showing robust expansion and a richer mix that favors margins. That said, profitability remains the key hurdle. Despite top-line growth, the company still reported a net loss in the first half, driven largely by elevated sales and administrative costs. As of June 30, 2025, Tempus held a certain level of cash equivalents, and marketable securities, but also carried sizable long-term debt. Operating cash burn in the first half of 2025 was meaningful, indicating funding pressure. To ease cash drain, Tempus previously issued convertible preferred notes, providing incremental liquidity and extending the runway. However, this adds leverage and heightens the urgency to achieve cash generation. For a high-growth company, balancing expansion and cash burn is essential, and Tempus is still calibrating that balance. Looking ahead, let's connect this to guidance, M&A contribution, and what it means for the story from here. According to the latest investor materials, Tempus expects 2025 revenue of $1.23 billion, up more than 75% year-over-year, well ahead of consensus. Signaling strong momentum in the scale-up phase, this growth reflects both organic expansion and M&A uplift, with Ambry a key driver. In other words, the $1.23 billion target includes Ambry's contribution alongside Tempus's internal growth. Ambry not only boosts near-term revenue but also opens new lanes, reinforcing hereditary cancer screening leadership while accelerating expansion into neuropsychology, radiology, and cardiology. In 2025, Tempus aims to grow share and improve profitability through scale and integration, potentially an inflection year. Overall, Tempus AI has built a strong moat in a fast-growing precision medicine arena. As revenue and gross margin rise, the company has a path to becoming a cash generator over time, especially as AI and precision care converge at scale. Risks remain. The sector is tightly regulated. If growth under-delivers, it could pressure the stock and operations. If rules around the identified patient data tighten, data business profitability could be directly affected. Investors should track policy developments and the company's execution closely. In sum, Tempus AI appears to be in an ongoing improvement cycle, making it an appealing opportunity for long-term, growth-oriented investors. Thanks for watching. That's all for today's episode. If you like, don't forget likes, comments, and subscription. Bye.